What's up, guys? My name is Pete, and I'd like to welcome you to another edition of Phipps Tips. In today's episode, we're going to take a look at the market. We'll check out the day's winners and the day's losers, see who's popping, see who's dropping. We'll look at a couple of news articles I found pretty interesting that I'd like to share with you guys. Get your thoughts on them, see what you guys have to say. And finally, we'll wrap it up with a little bit of technical analysis of Bitcoin, see if there's a pattern or two to be seen in there. We'll look at a couple of the big movers this weekend, see if we can figure out where they're going from here. All that and more coming up. Don't move a muscle. And here we are, guys, checking in with a market cap of $421 billion with a 24-hour trading volume of 30 billion. Bitcoin dominance coming in at 37.3%. That's up a little bit from the weekend, seeing it at about 36.5%, 36.6%. That should be expected. There's a lot of altcoins being turned into Bitcoin, which are being turned into Tether. That's how that transaction works. That's why we're seeing the dominance raise a bit, I believe. And our top five, nothing too big, nothing shallow, mostly shallow reds. 6% from Bitcoin Cash. EOS, however, which had a monstrous week and weekend, seeing about a 19%, 20% retrace. That should be expected because that coin went absolutely crazy, guys. Absolutely crazy. Check out what we've got going on versus Bitcoin on the day. We have Bitcoin Dark, number one, at 76.7% up against Bitcoin Fusion, up 30.5%. Bitcoin Private at 23.5%. Verge seeing a 10% bounce against Bitcoin. Nano up 8%, Substratum up 7.7%, and ELF 7.75%. Tron bringing it up the bottom at 7.65%. All pretty good stuff. Now we're going to check out our top gainers and losers for the day. Origami coming in at number one at 87.5%. Bitcoin Dark 73.61%. Chainium 71.97%. OXFina 61.09%. And Dignity, a project that really, guys, I do dig. 59.34%. If you guys are in any of those coins, congratulations. Moving on to the losers, we got Home Block Coin down 44.1%, BitBTC down 40.94%, Earth Token 36.87% down today, guys. Bitcoin Plus 31.14%, and Beluga Pay, never heard of that, down 28.6%. Now, guys, I want to check out a few news articles I ran across today that I found pretty interesting. I'd like to share with you guys. Stay right there. Is the Bitcoin bounce for real? Peter Tchir, the contributor to Forbes.com, he writes this article out. It's actually a pretty good read, guys. Cryptocurrencies just had a great week. According to Coinbase charts, Bitcoin was up 90%, Ethereum was up 32%, Litecoin 12%, Ripple, which isn't on Coinbase but is covered by CoinDesk, was up over 38%, according to data supplied by Bloomberg. I've been bearish on crypto as of late. Quotes this guy here, Peter Tchir. And with a view that Bitcoin would sink below $5,000 on declining adoption rates. However, I would be foolish not to at least reconsider that view after this past week when A, price moves were strong and consistent and took things like Bitcoin back above the 200-day moving average. As reported in Cointelegraph and other sources, George Soros is allegedly investing in Bitcoin, which is worth noting since as recently as Davos, he seemed dismissive of crypto. And Davos, guys, is like a big convention held in, actually, I believe Davos is a country, and supposedly it's a fantastic place, beautiful. But they have this summit there, and a bunch of world, investors, they go and they all meet up and discuss things. I'm not too sure on the specifics. But moving on, mounting concerns about Russia and Syria seem to have helped crypto just as the easing tensions in North Korea seem to hurt crypto. Any tax-related sellings should be over, and there does seem to be a correlation between FANG and crypto. FANG, guys, being, if you're not in the know, Facebook, Amazon, Netflix, and Google. Both did well the past February lows, and now FANG has rebounded after Zuckerberg's testimony. And that's the owner, or CEO, I should say, of Facebook. He had a court hearing here not too long ago over privacy issues and Facebook. So, you know, if there's anything you want to look up about that, it's all over YouTube or any news site, really. But this is the first time that enough has gone on to wake me out of my bearish slumber. I still have too many concerns, however, about adoption rate, competing tech, market manipulation, government interference, etc. to change my view. And he will remain bearish, and however, he is less convinced that with what he has just seen this past week. To turn bullish, he'd need to see some follow-through, especially since the potential for escalation with Russia seems to have diminished. So what do you think, guys? Do you think the bounce was real? Do you think crypto's on its way up, or are we just going to be, you know, doing another dead cat bounce? And for you new guys, the dead cat bounce is a term used in like technical analysis that as long as something is falling and it bounces, even a dead cat will bounce and it'll continue to keep falling. I know that was a terrible explanation. I'm sorry for that. But so yeah, guys, tell me what you think. Do you believe that the bounce is for real? I personally, the further and further we get away from that trend line, that downward trend line of death, the more bullish I become on Bitcoin for sure. And moving on, we're going to go to the security officials weigh in on protecting cryptocurrencies. Follow My Ether Wallet hack. And for you newer guys, My Ether Wallet is actually a wallet that can hold all sorts of different cryptocurrencies that are derived on the Ethereum blockchain. And here just recently, it was hacked. Not for very much, from my understanding, but it's just a good idea to know what you're putting your, I guess, assets into. And My Ether Wallet it's not a hardware wallet at all. Like, you can't take this offline like you could, say, like a Trezor or a Nano, or just like a laptop or something that you can take offline and like have a wallet on there. So, you know, you're always open to some sort of, you know, attack, I guess. And with that, we'll get into it. Old world problems persist in new technology. DNS hijackings, as demonstrated with My Ether Wallet, are becoming more common simply due to poor measures taken to secure the technology behind cryptocurrency. While DNS attacks are considered old-fashioned security risks for traditional online banking platforms, these hacks are occurring more frequently against virtual cryptocurrency wallets. James Slaby, Senior Marketing Project Manager at Acronis, weighed in on My Ethereum Wallet hack, offering an explanation as to why this might have occurred from a security perspective. He is quoted to say, "Criminals have exploited vulnerabilities in systems used to mine Bitcoin, mining being the process of creating new units of cryptocurrency, and the online wallets used to store them. Old-fashioned phishing scams, like the one that occurred with My Ethereum Wallet, and confidence tricks still work. Unwary users have been duped into giving up passwords that protect their online wallets or exposing their private cryptographic keys, which is like giving away both your ATM card and PIN. However, the weaknesses are not in the cryptocurrency, but in everything around it, the services and systems used to create and store it, the employees that operate that technology, and the customers. It's a brand new world in some respects, but in terms of security risks, old problems persist." And I honestly agree with that, guys. Absolutely. Moreover, a recent article from Forbes points out that my EtherWallet attack was also due to another old-school hacking technique known as Border Gateway Protocol, or BGP-based hack. A BGP is a standardized exterior gateway protocol designed to exchange routing information on the internet. In the case of my EtherWallet, hackers most likely took control of BGP routers to carry out DNS attack on my EtherWallet. Rather than redirecting information to Amazon Web Services, the DNS infrastructure from my EtherWallet was redirected to a server in Russia, controlled by the hackers who have not yet been identified. Huh. How about that? Now, protecting cryptocurrencies now. As blockchain technology and cryptocurrency continues to evolve in mainstream technology, old security problems like these are likely to persist. In the meantime, there are security measures that can be taken immediately to enable the protection of cryptocurrency stored in digital wallets. To ensure the virtual wallet, like my EtherWallet, is protected against private key theft, cryptocurrency owners should carefully consider where they store their private keys. Guys, that is a big thing. If you set up a wallet, then your private keys can be stolen. Sibohan McNamara, a published researcher and data scientist in American and European cybersecurity sectors, told me, "Be sure not to store too much value in one wallet on your hard drive or phone. The most secure option for storing a high value amount would be to spread it out. Bitcoin wallets can be printed out and stored on paper. This would be a slip of paper containing your public and private keys that you can store as you wish. Another option is a hardware wallet, which can store your Bitcoin offline. Hardware wallets are advantageous because the key data is stored in a protected area on a microcontroller, and they are not vulnerable to software viruses that can hack into wallets stored on computers." No, that is like your Trezor, guys, like $70. It's a great investment. You buy it, you put your crypto on it, and you never have to worry about it. In addition to private key theft, another proven weak point for cryptocurrency wallets is email. Email hacks have commonly led to breached accounts and stolen Bitcoin over the past few years. This has been achieved in past by hacking in email accounts or resetting the passwords for login. Email security is the best solution for this threat. Many cryptocurrency owners use two-factor authentication for their email accounts. You should always use two-factor authentication for your email accounts, guys. You should use two-factor authentication for anything that you're doing with crypto or anything that you're using money for online. Moreover, crypto holders should also ensure the third-party Bitcoin platform of choice has two-factor authentication. Most third-party Bitcoin platforms will require this, but if they don't, consider that a red flag and go elsewhere to trade and store your Bitcoin, which is the absolute gospel, guys. Will hardware wallets fix these problems? Ultimately, the MyEtherWallet hack highlights the vulnerabilities of using digital wallets to store cryptocurrencies. Those looking to secure their funds offline should invest in a hardware wallet. Despite some high-level security issues that have been identified with hardware wallets, these were designed to protect against many digital threats facing crypto holders, guys. While a digital wallet is connected to the internet, a hardware cold wallet is not. Many people in the space who hold digital assets utilize both a digital and cold wallet for different purposes. For security purposes, it may be smarter to keep the majority of digital assets in the cold wallet, while a smaller portion is kept in the digital wallet for purchasing things. A cold wallet makes it much more difficult for hackers to steal your digital assets because it's not connected to the internet or any servers, said Andrew Rosow, cybersecurity law professor at University of Dayton School of Law. So, there's that. Reportedly, up to $43 billion worth of Bitcoin has already been irreversibly lost, leading people to take their security very seriously, which, guys, it should always be taken very seriously. I mean, you don't just leave your cash layout for, any Tom, Dick, and Harry to pick up. So why would you do it with, your digital assets? That just seems ludicrous. Both digital and hardware wallets have security implications, yet being aware of the vulnerabilities plays a large role in ensuring the protection of cryptocurrencies, which is true. So what do you think, guys? Do most of you keep your crypto in hardware wallets, or are you those guys who keep your stuff on the exchange just in case, things start to moon and you want to take in profits? I understand that traders, it's kind of hard if you are a trader, keeping your money in a wallet and then, pulling it out to trade, there's a fee involved, and then trading, there's always another fee involved with the exchange, and then moving anything back into the wallet would actually cost you some money. So I can see on a trading standpoint why you wouldn't, but if for you hodlers out there, guys, yeah, wallets, they're great investments, they're great ideas. I really recommend them. I don't want you guys to lose your money. That's a horrible thing for anything to happen to anybody. But moving on. Now we're going to check out the Bitcoin chart here in a minute. Stay tuned. And here we are, guys, on the day scale of the Bitcoin versus US dollar chart on the Bitfinex exchange. And as we can see, currently Bitcoin's printing a bit of a red candle. If we grab a trusty trend tool, let's have a look to see what Bitcoin could possibly be doing, huh? What we'll do is we'll start down here at the most recent low, and we'll see if we can't pick up a trend or two here. So what we could do is get a touch here and here. We stretch this line out a bit. That looks good. Maybe even pull that down a hair. Something like that. We can see that Bitcoin's in an upward direction. This candle seems to currently be pushing down through this line of resistance. If it punches through, we could be in a little bit of trouble. But currently, we can just see it just dance up along this trend line, and everything would be great. If we take a second look, guys, if we grab another one of these trend lines, we can start technically at the top of this same candle, stretch up this way, and notice that Bitcoin's in a rising channel. I will actually grab that and drag it back a little bit like that. There we go. Yeah, so we notice that Bitcoin's here is in a rising channel, which is it's a bullish sign, which is good. If everything goes, as it should, Bitcoin technically, let me grab the drawing tool here, would just continually be bouncing up and down this channel until it got to about this area. Let me show you with the trend line, guys, where it would meet its first real line of resistance. That would be around, and actually a trend line isn't the greatest because this area's got a lot of price action in it. So what we'll do is we'll draw a box, and we'll start about right here and swing out about like that. It may even be a bit lower, like right around through here. All this price action in here, guys, acts as a line of resistance for Bitcoin to try to punch through. If we can get this to punch through here and print a candle on the other side, then we could actually catch a bounce. Let me get back to my drawing tool here. And say we punch through and we can actually turn all of this resistance, we could turn it into lines of support and continue to bounce, skyward. That is the hope, that once we retest this 12k range, 11,000, 12,000 range, we can punch through and not see like the triple top or the double top and then, plummet back down. We want to, go onward and upward, as a lot of people are suggesting that in May that we're going to see a nice bull run. I'm hoping so personally. So that's what we got for Bitcoin, guys. Moving on to Ontology. Now, this here is a coin that this weekend, if you were a part of, at any point this weekend, you came away with a little bit of profit. In fact, let's have a look. We'll grab our long position tool. And normally, guys, this is a kind of a tool that you would use to gauge if you were wanting to get into a coin for a long period of time. You would set this area, this first point at where you entered, and then where you're hoping that the target area would be. And we're not using that for that purpose. We're using this just to show how much of an increase Ontology had. And over the weekend, if you were in it from this area here, it was a 64.5% increase, guys. 64.5%. That's insane. That is an insane run. And as you can see, you know, it's retracing, obviously. But again, guys, this is its current line of resistance. These 2 days of price action right here. That's it. Once it punches back through here again, you know, it's just, let me grab my, we'll grab an Elliott wave tool here, and we'll say that this was wave 1 on a corrective wave, so the A wave. And we'll go here, back here, and we'll get to about the 68%. And from there, guys, and we go into Elliott wave, back up to wave 1, and we just, it goes without saying that this thing can just go and go and go. There is nothing to stop it once it reaches past here, guys. There is no resistance. I mean, the sky is basically the limit, which is great. I mean, if you're in now, cool. If you're in when this coin first came out, geez, you're rich. You could be buying an island with the money that you've got right now. Yeah, Ontology, guys. This coin, it did fantastic things over the weekend. Absolutely fantastic. I just wanted to bring that to everybody's attention because, wow. Moving on, we're going to check out Encash. Now, it had a great day today. Well, it had a great first half of the day, I should say. Around 8 o'clock this morning, it printed a huge 8 o'clock Eastern Standard Time. It printed a giant green candle and then just kept printing candle after candle. Here, this third one, at about 4 o'clock, the bears finally had enough. They're like, no. And they pushed down. And they've just continued to keep pushing and pushing and pushing. And they're threatening to take back every bit of profit that Encash gave today, which is sad. I'm in Encash, and I really like the project. I'm a long-term guy on it. You know, I'm not really looking for the big breakout and trying to sell or anything because, like I said, this is a long-term project in my opinion. But that's going to be it for the video, guys. Let me know what you think. If you're still here after all this time, hit that subscribe button. Hit that thumbs up button. I really like hear your comments on technical analysis. Anything that you'd like for me to go over, have a look at. I'd love to do that for you. And until the next one, guys, peace.